everybody. Welcome. Welcome. Mark, you there?
Yes, I am.
Well, welcome, everybody. Glad to have you at our webinar, free Monday webinar here today. Mark and I will talk about the market, and we're also promoting for probably the first 5 minutes or so what couple exciting classes coming up this week. It's we got a busy week here, right, Mark? A lot of potential fireworks on the table. Yeah. What do we got? We got the Fed meeting on Wednesday.
GDP Thursday morning. Amazon, Google, Apple, Microsoft, McDonald's are all reporting this week.
But other than that, it's a quiet week.
That's right.
Yeah, unbelievable. So good to have everybody. We wanted to real quick. Let me just share here, Mark, and you can just jump in whenever. Yeah, I'm just going to go through a few things on the classes coming up, and then we'll look at the market and talk about some trades for this week and different things. But we've got 2 classes coming up this week. The July 3K class. I was just making some slides for boot camp, and I thought, well, I've got the slides made up. We'll go over them. It'd be helpful to understand. So starting tomorrow, we'll go Tuesday and Thursday for 4 weeks. It's the July 3K class, we call it. It's a plan to make 3K monthly, excuse me, on 25K. Let me grab a water here because Wayne might be right if my voice is, yeah. So that's this week on Tuesday and Thursday. We'll go for 4 weeks, the July 3K class. And then starting Wednesday, we'll go Wednesday and Friday for 3 weeks. The first time we've ever done a class on directional butterflies, which is kind of the preferred speculative strategy in our community. And Mark, what would you say maybe the 2 reasons that might be the preferred spec strategy that we use?
Well, I think it is from 1, they can be inexpensive, and 2, you can really have an exponential reward with the fly. And it gives you a range. You don't have to be exactly right. You can put something in whatever width fly you use. You can have a range that it could get into that could be profitable for you.
And as they might say on the south side of Chicago, it's a speculative strategy you can use that when you're wrong, it's not like getting your face ripped off, right? Whereas if you buy a call or a put and you're wrong, or even a vertical spread, if you're wrong, not as bad as a long call or put, it can hurt, right?
Mm-hmm.
And I think these are, I think you'll really enjoy the class, and we'll apply it to earnings because we're getting in the heat of earnings season. But focusing just a little bit on this 3K plus, for those of you who aren't familiar, how many of you aren't familiar with our 3K class? How many of you are not familiar with our 3K class that we've been doing for over a year? Okay, David, I'm sure a few others. I'll go quick here. And Mark just come in. So the July, we started this over a year ago, and it's been probably our most popular class. And really what it does is it's a class that gives you the teaching. Obviously, our goal is to help you get more independent. You get the teaching, but we do live trades each class, kind of hold you by the hand. So you're getting the live, you're getting the instruction and the why behind it. And then you're getting the trades. It's like the best of both worlds, isn't it? It's like, when I think of like an alert service, it's just like give somebody the trade. Right here, we're giving you the trades, walking you through it, but we're teaching you how to fish. And so the assumptions for this class are, Mark, I think I'll go through each slide real quick, and then if you have any comments on each slide, how's that? That way we get through quick. So the assumptions are 10K, 20% of the 25K, it should be 5K, right? Sorry about that. I went too fast. 5K, 20% of this in cash, capital allocated to trades Tuesday and Thursday, those are our class days, $10,000 each day for class trades. Now, again, that's what we're doing. If you're a smaller trader or beginner, you won't be doing that. Maximum trades each day, 3. Usual amount of trades each class, 1, but we may do more. P&L assumptions are 3% a week and 12% monthly, which basically we did with the recent June class. Assumptions are turnover of capital every week, not usually overlapping trades each week. So on the same capital, the trades we get out of this coming week for class will get out by the time we start the next group of trades. Usually use SPX most often. Boot camp, so when you sign up for this, you're basically getting almost 2 hours of this stuff because you get, so the way we're going to do is at 1 Central, let me see which I need to go. 1 Central is the boot camp, so 12 Central is going to be the boot camp that goes 45 minutes, and that's going to be for beginners and stuff like that. And then at 1 o'clock Central will be the 3K class. If it's your first month you ever do this, for your first month, you can watch the boot camp live and get access to the 3K class and watch it archived, but you can't watch the 3K class live. This is going to be the first month we did that. That way, because the 3K class, many people have been in it 2, 3, 4, 5 months. They understand the concepts. And if every month we've had beginners, it takes us back to ground zero because they're asking these basic questions, which should be covered in the boot camp. So the first month, you can have access to the 3K class at 1 Central, but live, you can only come to the boot camp because that's where you should be. We have boot camp trades for beginners that will only be covered in boot camp. The 3K trades will be bigger and be more for people that have been through it a month or two, that know what they're doing. We will always trade the allotted capital of 10K each class. No. Why? Weather or market conditions and VIX levels will determine what percentage of allocated capital we will utilize on each Tuesday and Thursday. And we've traded, I think last class, maybe 30% of the capital. So $3,000 to $4,000, 30 to 40%, $3,000 to $4,000 of trades each class live. And I'm expecting to up that number as we seem to be stabilizing a bit. I still think it'll be bumpy, but we'll probably up that capital this class. And then we have a beautiful table on our class page that gives you all the P&L, the yields of each trade. You can follow every adjustment. So it's a nice table that we started the last week to help you see exactly what we're doing on trades. Mark, I gave a mouthful. Anything you want to add to that or comment on?
I mean, what this does is we really try to help you with the plan for the whole trade, when to get in, when to get out, how to repair it if it happens to go against you. So it's really a full view of trades that will work in the current market. We try to do things that have an excellent chance of working currently.
Thanks, Mark. And then 3K class versus boot camp, the difference between the two. Boot camp is 45 minutes from 1 to 1:45 or 12 to 12:45 Central each Tuesday and Thursday for 4 weeks. And that's going to be your foundational concepts, beginner material. And the nice thing is, even if you're in your second or third or fourth class of 3K, you always have access to the boot camp. So it's going to be more beginner. The 3K is going to be assuming you understand most of the concepts we're talking about. Will I have access to both classes? You will. But if it's your first month with us taking a 3K class, you can watch live the boot camp taped or archived of the 3K. So you can watch it the same day, but it'll be archived. That way, the 3K class goes smoother. Class trades for boot camp versus 3K will be totally separate. The beginner trades will be for beginners in boot camp, and that won't be discussed in the 3K class. Difference in experience level of boot camp versus 3K. I mean, you get some people in boot camp that are more experienced, but generally a lot more beginners in the boot camp. What should your expectations be as a new student in the boot camp? Learn the craft, right? Learn the craft, and we're there to help you do that. Mark, anything on that slide?
No, I mean, I think what happens with the boot camp is you can just dial in the very granular level with the basic questions. And then hopefully after a month of that, you're more ready to be up and running to do the actual trades and be able to follow the class better after going through boot camp a month.
Okay. And I'll just give you two more quick slides. Big picture options portfolio, hypothetical 100K portfolio, kind of how we look at the world with options. Again, that could be 100K portfolio, it could be 10K, it could be 500K. We separate into three strategies. The other thing, Steve Smith made a point. He says maybe a quiz to determine who is a beginner and who is not might be something to consider. Just my 2 cents. The way we've done it, since we're making this change this month, that if you're first time only in 3K, you go through the boot camp, but we've made it clear that Johnny's let them know if it's your first month in boot camp, but you're more experienced and you want to get right into the 3K class live, all you got to do is send an email to Johnny or me and just do a 5 or 6 minute phone call with me, and just to kind of filter it through. So if you're a little more experienced and you understand a lot of the concepts, if you look at this, I'm going to cover quite a few of these tomorrow. But if you look at all this, time decay, short premium, range bound, probabilities, income trading, delta, gamma, theta, vega, expected return, probability of touching, philosophy of range bound trading, vertical spreads, balanced and unbalanced butterflies, horizontal spreads, iron condors, double diagonals, risk management philosophy, adjustments and adjustment philosophy. Not that you would know everything, but if you have a good understanding of what I'd be talking about here, then you could just call me and say, hey, Dan, I've traded for a while. I'm pretty comfortable. A quick call with somebody, and I can usually have a good idea where they're at with a few pointed questions. And so these are the types of strategies. You can see long strategies, normally 30 to 50% of our allocation for a lot of people. Some just do the income strategies, but that'd be long-term bullish. It'd be your perspective, covered rights, cash secured puts, long diagonals, put credit spreads, long leaps, long stocks, long ETFs. And that would be a normal allocation, 30 to 50%, depending on what the market's doing. Income strategies, neutral or range bound perspective, relying on probabilities and time decay as my edge. Iron condors, calendars, butterflies, double diagonals, 30 to 50%, the normal allocation. And during the class, this will probably be the biggest part of which we'll use. And then speculative strategies, long calls and puts, long verticals, directional butterflies, calendars, ratio back spreads. And then you could have, a bit of a portfolio in cash. Vadam says, why are cash secured puts long? You sell them, right? Well, yeah, cash secured puts are selling out of the money puts. Historically, people use them to sell an out of the money put, and maybe quite a bit, 10% out of the money or whatever. And if the stock doesn't go down, you do these in stocks you like, you just collect the paycheck, you get the premium. If the stock goes underneath your short strike, you're basically going to buy the stock at 10% or 8% lower than the current price. And these are in stocks you like. So cash secured puts are you're selling a put, but it's a strategy that is neutral to bullish. So that's what a cash secured put. Yeah, these slides will be posted. But these are the concepts. If someone's for the first time tomorrow is taking a 3K class, you'll get the boot camp for 45 minutes, and then you get the 3K class. which is about an hour, but you just watch the 3K archive. But if you have a pretty good understanding of this slide, a lot of these concepts, you can just give me a quick call or an email, and I just want to make sure you're ready for it. Agree? Because if you're a beginner, it's frustrating, isn't it, when you get in and you don't have a clue. So we're trying to teach you, build you up as a craftsman, and do strategies that would be appropriate for you.
Dan, I was going to say, no need to be embarrassed or upset that you're maybe a little towards the beginning of your options journey. That it's fine. It's only going to be a month of boot camp, and hopefully you'll get a lot out of it. And this is all for you. It'll make you better.
Yeah. So anyways, folks, we're going to look at the market in a second, but I just want to give you an idea of, I think this is just a great class to really jump into the market with some people that have been in the water for a little bit and can help you and also teach you. So this is if you want to become, your goal would be kind of an independent craftsman doing this. I think this would be a great opportunity for you, that you're getting the teaching, the whys behind all this, but we're going to be doing the trades together. As Steve said, who's been in the 3K class for quite a while, and Arlen and others have, it's a process. And, you don't need to be a rocket scientist, but it's just, it's, if you want to make fettuccine Alfredo and get good at it, it's a process. And that's what we're doing. So let's take a look at, and that'll start tomorrow. So as I said, you can go to our class page and sign up, and we'd love to have you. Again, everything will be recorded. So if you're working, you can't make sometimes or whatever, it'll be recorded. We usually do the live trade for the 3K class between, and we're going to try to be even more on time with that, between 1 and 1:15 Central. We'll send an email out. So anyways, but let's take a look at the market. We'll look at a few things, and then we'll come back to, we'll give you kind of a taste of the 3K class, and then a taste of this directional butterfly class, which will be starting Wednesday this week. So Mark, as you look at a chart of SPX here, here's a yearly chart. What comes to mind? What are you thinking?
Well, I tell you, for one thing, when you have a week of all the news we have, I don't know how much I'd want to believe charts, to be honest with you, because this is probably going to be a week of more, or a chance of more parabolic moves that may go even beyond what the technicals say. But certainly you could see that we have been a bit range bound over the last, since what is that, the middle of June?
Yeah.
We're kind of tacking up, but I think all bets are off on fundamentals and technicals on a week with all the news we have.
Yeah, I mean, as Mark said, we've this, which I kind of made a square out of here, looks, maybe we're settling down. It doesn't look as, one way, but you have some catalysts here. We've rallied about 300 points in the last little over 2 weeks here, right? But with some of the things on the table, there's definitely room for, we could get more of a parabolic move here. Just again, perspective, January 4th, we had 48.18. We're still, 800-900 points off the high, right? So I think this week, or at least for tomorrow, to put it that way, you might be a little less, definitely less size, right? Because you've got some catalysts here. Not that it has to move, but you got some potential fireworks here that could really, the Fed, big companies coming out with earnings. And what was the third thing you said, Mark?
The GDP also coming out.
What day is that coming out?
Thursday morning before the market.
Okay, parabolic move. Yeah, it's probably too strong of a word, Joe, but that parabolic might mean that, could we have a couple 100-point move this week?
Just larger than average. When we have larger than average move.
Yeah, larger than average. I mean, if you look at, let's see, for today, if you look, I don't know how many of you are familiar with the term expected return? How many of you are familiar with that term for expected return? So if you look at, here's July 29th, which is Friday, right, Mark? And we look at so the expected move is plus or minus 94 points, right? So they're saying, and it's really what that is a standard deviation number. So they're saying there's a 68% probability. Let's round this to 100, just because I could do math better on 100 than 94. If we're at around 39.50 right now, what are they saying? They're saying there's about a 68% probability will be between 38.50 and 40.50, right? By the end of the day, Friday. So parabolic might mean, okay, if there's only a 68% probability it will be up or down, close to 100 points, it means a much less probability, right? Like 30% or less that we can maybe hit 37.50, right? Or 41.50, which would be up or down 200. So, it gives you an idea, right? What's can happen. And I think with all the fireworks on the line, this would be one of the weeks where I'm not saying it would happen. It's still a low probability event, but it would not be surprising, right? Again, very low probability, but this would be the type of week that could generate something like this. Do you agree, Mark?
Oh, yeah.
But again, you don't want to go overboard because, a lot of times nothing happens, right? So with that being said, how we approach the market, folks, just like, when you got a car and you're in Chicago in the winter, when do you, in the winter when there's 8 inches of snow or 9, it determines whether you're going to bring the Kia Optima which will be like, with ice skates on if you go through the snow or anything, or do you bring a big tank, right? Like a big SUV or a Subaru with the rear wheel, and the same like when you go to the beach, right? If the waves are too high or there's lightning or sharks, you back off. So we're just trying to see what's in front of us. And the other thing is, so we look at the market, what's going on this week. Other things we'll look at is things like ATR, average true range, which was around 100 in May. Now it's 70. And that gives you an idea. Really, the ATR is really giving you a measurement when you see on a price chart these big candles. It's saying big movement. When you see these big candles, it's saying the difference between the high and the low each day is a lot, right? So when you look at a period like this, last October, November, we're going up, but very easy queasy, right? Nothing, you can have a cup of tea in your right hand, maybe a turkey sandwich in your left. But when you see these candles, they're telling you the range between the high and the low could be near 100, right? And for a range bound trader, you want it narrower, right? So there's still, even Mark said, like it's been range bound the last period of time, the last month or so. You still see some good sized candles there because there's still some, it's like being near a volcano. There's still some spitting out of that thing, right?
Right.
And also the VIX levels are, we've been in the last 3 months, the VIX have been in a level between 20 and 35. And this is the lowest we've been in a while, this 23, right? So we're on the lower end of the level of this, I call this a high volatility range, but we've been in the lower end of the range. The market's settling down, but again, we're far from, as I've always said, the biggest moves I'm ever concerned of in my life, the biggest up moves are up moves followed by a big downturn, right? And so even though this looks innocent, right, Mark?
Oh, anything can happen from there.
Yeah, I mean, what this isn't showing you is where we've come from, right? And, we could easily go, and the other thing is it just isn't guaranteed we're going up a couple hundred points in the next week or two. We can go the other way. So it's we're trading more now, but it's just being clear what kind of environment we're in. I don't got us, Arlen, I don't have that. I have us above some of the shorter term moving averages in the 50. I think, isn't this the 200? I've got the 200 moving average at like 43.52. Is that right? So we're nowhere near I got us below, we're above the 50-day moving average and many of the shorter term moving averages, but below the 200. So technically, again, we're going in the right direction, but would everybody agree? We've got a long way to go, baby, right? I know there has to be a song out there like that. Yeah, and again, we're not saying, that's why I put that. We have long portfolio trades, we have income, which we do most of, and then spec. We're just trying to help you get a plan that you get different trades together. But income would be the range bound. This would be more trades in your retirement account, covered rights and stuff, and then your spec. Now, if we pick one trade like that, what we do in the 3K class, Mark and I will get together around that 1 o'clock central hour, and we'll talk about, based on what the market's given us, what might we look at today. Now, if you're a beginner, you'll get more boot camp stuff because some of the terms you might not understand. But Mark, what would pop out in your mind looking at the market, the chart, the news for the week, and the VIX level? If you had to do one trade today, what pops in your mind?
Well, I think if you wanted to do something, an income style or non-directional trade that's a little safer, you're going to need a lot of duration, maybe 30 days out, so that if the moves are made, generally it goes for and against you a little slower, but it can really help you through a rough period. And maybe even some type of wider butterfly in the SPX, maybe, like 80, 90 points wide, that type of thing, to give you even more room.
Yeah. And so Mark brought up a great concept that when you're expecting the waves to be higher, one way in the world of options that you can get a little more price protection is duration. So the further you go out, it won't be as bumpy if you have a big price move. And so that's why we will look at duration. And again, there's quite a few landmines that are sprinkled out this week, starting probably from tomorrow to Friday. So when Mark was talking about, and we can throw one up here, this would be an example, and this would be something we'll cover in boot camp, because a lot of you who said you're maybe more beginner traders, or you haven't taken a 3K class, or you're not as familiar. How many of you have never done a butterfly trade before? How many of you have never done a live butterfly trade? Anybody? Yes, no? Okay, Patrick says no. And so this will be, now again, we don't have enough time to get it, but we'll go over some basics of it. But this is something that we might consider, but we'll talk in detail in the boot camp tomorrow, from a beginner level on, what this is. We don't have as much time right now, but something might look like this, right, Mark? I'll just put up here 39.60. What are you thinking, like 70 wide or something? I'll just show you.
At least that, I'd say, yes, 70.
70. So if we go 70,
whatever, or 80, 90, whatever. Something.
Yeah, let's go 70 just for cap. We'll keep it, but we'll say 30. Where are we? I put it at, say 39.60, 39, 138, 90, 70 down. What do you think? Maybe 65 up or something?
Yeah, that'd be good.
40, 25. So we'll definitely cover this in detail in the morning, not in the morning, in the afternoon class tomorrow, but I'll just show you, this is what it looks like. It's called a butterfly. So if the underline is 39.53 and our short strike is 39.60, we're using TD Ameritrade Thinkorswim. So this would be your graph at expiration. So we're using August 26th. So that's about 30, 31 days out. That's your graph at expiration. This is your graph today. And then over time, this position morphs into the blue line. And you can see how level that purple line is. So, you know, even if we had a 50 point or 100 point move in the SPX tomorrow, you can see, right, Mark, as you, it's the purple line you want to focus on. That'll be more, that's going to be the graph today, and that'll look closest to what it'll look like tomorrow. This is more what the trade will look at in 30 days, 31, which doesn't help us today. So you can see, even if we go 100 points down or 100 points even up, the P&L doesn't go much under zero. So you have a lot of room there. And this is what the trade would look like. We would call this an unbalanced buy one, sell two, buy one butterfly. So you're buying a 38.90 strike. That'd be an in the money call. You're selling basically an at the money, two at the monies where most of the extrinsic value is. That's the part of an option that decays the most. And then you're buying the 40.25 call. So we would call that a 70.65. What does that mean? It means the distance between the at the money and the in the money call would be, in this case, 70 points. The distance between the at the money and the out of the money call would be 65. So when you have unequal widths from one side to the other, we would call it broken wing or unbalanced butterfly. And the side that's wider, you'll have a little more risk. The side that's narrower, the upside, will be less risk. And usually the bigger number will refer to the width on the downside, and that's the width on the upside. Is the middle strike always at the money? For the range bound trades, Bob, yes. At the money or within 10 or 20 points up or down in the SPX, which is a $3,900 vehicle. As the Wednesday class, Bob, that will focus on more directional butterflies. So the short strike, if we're bullish, will be quite a bit above the current price, or if we're bearish, will be quite a bit below the current price. So anything else, Mark, you want to share on that?
No, I think you covered that pretty well. That's a solid trade for this kind of environment.
Yeah, here's a debit of, it's about $10, so $1,000 for one contract. But this is a range bound trade. So instead of a spec trade, you start out, you need it to move. Here you have this quite a bit of a range where you're good. And then what we'll teach you during the class is what happens when we go outside the profitable area. What do we do? Do we adjust it? Do we take it off? And that's all getting into risk management. And then one last thing, since we're here, well, what if we kind of, this is something we'll be talking about in tomorrow's class, but throwing it all in, well, what if we thought, right, that, you know, by the end of the day, Friday, right, just using this as a spec trade. Remember, we looked, folks, at the expected return. If we look at the expected return for this coming Friday, that'd be very speculative, but this coming Friday is July 29th. So in 4 days, right, Mark, we've got the expected move about 90 points, right? Mm-hmm. So if we look at this, folks, and we say, look at it. So this is a July 29 expiration. The expected move is about 90 points. And let's get an idea here, folks. How many of you think, if you had to take a guess, I mean, you could put one of these on each side. So it doesn't matter which way it goes, but let's just start with just an opinion. How many of you, if you had to bet, by the end of the day, Friday will be higher than we are today or lower? Higher or lower by the end of the day, Friday, after all the news and earnings? Higher or lower? And as usual, what do we get? Probably 50% lower, 50% higher, right? And I don't know myself either, but let's just, to give you an example, let's just say for those higher, where would you go up 90, Mark, or maybe 80?
You mean, oh, higher up? Yeah, I mean, 80 or 90, I think it should be fine.
Yeah, so if the expected move is a little over 90, I'd at least put it up 80 just to show you what this would look like, a directional fly.
Because you'll still be in the ballpark with your
Yeah, right. So if we go 39.50, 40.50, 40.30, let's just even set it at 40.30, up about 80 points. Just give you a feel of what this would look like. And you can put these on, and I'll just show you something in a second. After this, we'll put another one on. So you can see here, this is where we're at right now. And you could see as we get near Friday, if we're just, between that 4,000 and 4,060, see, as we get closer to expiration, that purple line will really start jacking up, right? That purple line will start going up, and you can see this is what we did. We kind of did a width of 4,000. The key is where you put the short strike. The width you can kind of play with, depending on how much risk you want. But so we centered the strike there, and you can see on an investment like $300, we're looking for generally on these about 50% yield. So I think these are a great trade. And what you can do, right, Mark? You can do. I'll show you this real quick. Analyze. You can do this both sides, right? So if we go 80 points down, you put like 38.
Yeah, they're so inexpensive, or you can set them up that way that you can have one on each side.
Yeah. So, or you can do a double, right? 38.80, 39.10. But these are a great way to play spec for many reasons. 38.50. And you have this. So you've got this set up. If we can get, here's where we're at, right? Let me set this up here. One second. So what we're saying is, here's the underlying. And you're basically saying, look, if we can be between 4,000 and 4,055, or the downside, 39.05 and 38.60. You see these tenths there, right? And they're forgiving, right? we might get out of this Wednesday or Thursday, but we're looking for 50%. But I think these are a lot less punch in the face than buying a call or put or even a vertical trade, more forgiving. So I think these are probably our favorite speculative strategy. So we're going to focus on that. Anything else you want to say on that, Mark? Or
No, I mean, this has so many different uses. One side, the other, both sides earnings, SPX moves, what have you. Lots of stuff there.
all right. Well, thanks, folks. I'm excited again. Tomorrow, Tuesday, Thursday will be the 3K class. July, plan to make 3K and 25K. And then Wednesday, Friday will be the butterfly class. You can get some directional butterfly class. And it'll be a good week for that with all that's going on. And we will, you can go to SheridanMentoring.com and get some information on that and sign up. If you have any questions, you can email John at SheridanMentoring.com or myself, Dan at Sheridan Mentoring. And until we meet again, have a great day, everybody. Thanks, Mark, for coming in here. And we'll see you guys later.
Bye-bye.